video about how to start your business or grow and start growing it, the 3 essential tools. My name is Michelle Nunes. I'm an accountant with Tax and Trust, and I really enjoy helping my clients start and grow their businesses. I believe we're good at it. We've been doing it for 20 years now, and we've helped hundreds of clients start and grow their businesses. Often I find entrepreneurs are a bit overconfident about their abilities when they begin their business, and they find pretty quickly that, like being a parent, it's a little bit harder than what they expected to make a profit long and grow the business. But like a parent, it's a very rewarding thing to do, and so you want it to be doing it for a long time. So I'd like to start with thanking you for attending and reflect on this thought of the day from The Rock. So there's no magic bullet for business growth. Success doesn't happen overnight. It's when every day you get a little bit better than the day before that it adds up. Well, that same thing that you do for fitness, to win competitions, to compete in the Olympics or at the top level of athletics, is just the same with business. You need to be motivated to keep working on your business, keep working on your skills, keep working on your leadership. And with hard work and the ability to pivot when things change and happen in your business, you will drive the business into making hugely rewarding improvements, bringing not with drastic changes, but just small improvements, regular and often. It's exactly what they do with your body. It's exactly what you do with your business. This is what we're going to focus on today, the power of 1%, having the courage to change. What you need to do to change your business results, the 3 essential tools, which is the main focus of this particular webinar, next steps, and then we'll finish in about 20 minutes. So we're going to start by looking at the power of 1%. So compounding, if you make daily changes and your habits in your business grow better and better, over time it adds up, and over a whole year, your business would have grown by 37.8%, which is amazing. So if you increase your sales by 1% within a day, then within 30, by the end of the year, you'd have a 37% increase in total sales. The negative is also true. So if your costs were going up and you weren't balancing that up with increased prices, so your costs are going up, but you need to keep your prices above that, then you can reduce your profit by a similar amount each by the end of the year, which is not where you want to be. So change is inevitable. We all know this, right? But change is not easy. And think about other businesses that perhaps have been impacted by change and haven't adapted quickly. It's like the more successful you are, the easier it is to get trapped into this way's working, and it will always work. So Kodak's a good example of a big company that had 85% of the market. The market for photography's increased because everybody's taking more photos now, but actually Kodak's out the back door. Another one is Blockbusters. They were contacted 20 years ago by Netflix, who wanted to do a partnership with them. They were the big company. They were making lots of money. They said no, and now they're no longer in business. So having the courage to change is hugely important. And I love this particular formula, which describes how you can change your inbuilt habits, your behaviors. We repeat them, and as you grow your business, you have to change your leadership. You have to change a lot, and so let's get into the value of this particular mindset. So we start with a resistance to change. So we're naturally happy in what we're doing, mostly, and we don't want to change the way we do things. We like doing the invoicing at the end of the month, or we like the way that we stock our shop. We like things the way they are. It's a natural tendency. Change is painful. So to want to change, first of all, we've got to be very dissatisfied with where we're at. And so when you started in your business, there would have been a level of dissatisfaction that you had when you're working for somebody else. And because of that dissatisfaction, it made you make the change, the fresh start to start that business. Well, it's the same thing that has to drive change in your business as you manage it. There has to be some feeling that I want more. I want more. I want more hours off. I want more money. I want more less worry about my business through the night. There's if that's keeping you awake. So more freedoms is often where people start and they come in and they want some changes. The next thing that's really important to get a change is to have a very clear vision of where you want to be. It's a positive future. So the clearer that vision is, the easier it's going to do the next stage, which is making those first steps in the direction of that vision. The first steps have to be simple and easy, and I love the Goldilocks principle with that. So if the steps to make the change are too hard, you'll give up and the goal won't be achieved. If they're too easy, you're not going to get the goal, the result, the outcome that you want. That motivation goal has to be at the right level that is a stretch for you, but it's not too hard and it's not too easy. And that takes a bit of sorting out how to do that. So what are the three essential tools for business growth? Well, in my view, they're an annual plan, an annual forecast, and ongoing reporting with accountability. Your business plan is a guiding document to guide you over the whole year, how you're going to deliver the business outcomes that you want to achieve for your personal life, the outcomes you've dreamed about. Your forecast shows the financials on how you're going to achieve the income or the profit that you need, how you're going to drive those numbers. And the ongoing reporting works with the above two to make sure that you stay on task, not just for 1 week or 2 weeks, but for the whole year. So let's take a closer look at each one. There are literally thousands of books and articles on the internet about the components of a business plan, but here's why we consider it a best practice. Firstly, a business plan should have a clear purpose. It needs to be appeal to your customers, why you are in business, something that's attractive to them, but also attractive to you and to your team, that they want to belong to an organisation with this purpose. Our purpose is to grow great businesses. We want to help you financially. We want to help you meet your have more time in your life, and we want to help you have peace of mind. It drives everything I do. The second one is a clearly articulated vision. What will your business look like in 5 years' time? Do you have any idea? What would you love it to look like? We need to put that into a statement that you can remind yourself and you remind your team members what it looks like. What do you want to achieve? Why did you go into this business in the first place? If you've only been there for 3 years, or if you've been in business for longer, what do you want to achieve now? What's the next step for you that would be very happy? You'd be very happy to achieve by the end of the year. The next stage is the high-level budget. This helps identify your gross revenue that's required to meet the income goals that you need to live on. It's the essential things. It forms the basis for the essential tool 2, which is the forecast. Next thing in the business plan is the relevant key performance indicators. So working out of all the different key performance indicators you can possibly have, your number 5 most important drivers that drive profit to your business. What is it that you need to measure, and how do you measure it, and put in to keep you accountable for that? We need to understand the opportunities that you have in your business right now, and set goals towards maximizing those opportunities, and also where you're vulnerable, and find strategies to reduce the vulnerabilities of your business and reduce risk. And finally, we want to give you some really smart goals so that when you walk away, or when you do your own business plan, you have smart goals that when you walk away from that time setting the goals, you feel really empowered because you know that you can achieve them with a bit more extra work, thought, and change. There are rules that we follow when we develop business plans with our clients. Firstly, all directors and decision makers need to be involved in the business planning process so we can have, more people around the table if we need them. Each person completes pre-work. That makes the alignment of goals so much easier when people have done that. Using an independent facilitator is really helpful because you're there as to assist us in thinking. But when you've done lots of business plans, you do get better and better at doing them, and your business plans are more robust and they work. Must be on one page, so it's simple, and you can print it out, put it on the wall, and it can be your map for the year. You share it with your team if you have a team. You report against it monthly. So when you end of the month comes, you can look at what the plan said, you can look at what your forecast said, and you can report, whether you've done better or worse, and how to manage the business. And you do a full review of the plan once a year. So this is just a quick example of the different components of a plan, where we've got what you're wanting to achieve, what the budget is, what your key performance indicators are, your ideal client, your value proposition, things that you'd say to your target customers, what opportunities, vulnerabilities, and then finally building the 90-day action plan, where you're going to work out the actions that you must take to get to the goals that you want to achieve, who's responsible for each action, the due date that they're all responsible for. And so we recommend having 3 to 5 goals so you can remember what they are and you have time to focus on each goal. Now, think, if you make one improvement every 30 days, you would have 12 improvements to your business at the end of the year. And the improvements can be very small, but such as, revising a business structure with a performance reviews with your team. So the second essential tool is the annual forecast. In the past, you might have prepared a forecast because the bank asked you for one, but it's something that should be happening every year anyway. If you don't know how much money is coming in or going out of your business, you can't manage it because you're not measuring it. You can manage what you measure. If your business has a positive forecast, you should still prepare a budget. It will help you unlock cash just by making a few changes. And we love doing those kind of value gap calculating changes and suggesting things to you. So your annual forecast takes that high level budget from the business plan and puts in monthly targets and accounting for seasonality to allowing you to predict and prepare for the bigger cash outflows, such as you're buying an asset, you've got tax payments, things like that. There's 3 forecasts. The profit and loss measures your profit. Cash flow is how your cash is coming in and out and includes those things like assets and tax. And the balance sheet measures the solvency of your business. So if your assets are higher than your liabilities, you're solvent. If that's the other way around, you're insolvent, which has risks for directors in a company because you're not allowed to trade insolvently and be reckless. Otherwise, you incur personal liability. So there's 3 different forecasts. They're usually done in one, a 3-way forecast, we call them. It's important to understand that you can influence your forecasts. It does show what can happen, but we can review it. And as the year goes by, we like to do that as part of the review accountability meetings. It shows your business efficiency. It shows if you've got cash to survive, because cash is king in business. And highly profitable companies can and do go under because they haven't got enough cash to survive while they're waiting for a project to come, bring their money in. And I've seen that happen when, a liquidation of another company has a subsequent fold effect on other smaller subcontractors under them because they weren't paid, even though the job, if they had been paid, would be very profitable. So a forecast tells you a lot, and it's really worth doing. Got some rules for about forecasting. Do what you can. Think about your business hard and think about what's going to be changing in the next 12 months. When we do the forecast, we send it pre-work. That gives you some ideas and some headings, such as, what's happening in your labour, what are you expecting with your sales. Then start with the end in mind, what you want that profit figure to be like, and then work backwards and get your sales, compare it to last year, review and adjust to make sure that it is achievable, and then go for it. The budget's set, and then you can just review. And then we've got to that third essential tool for business success, ongoing reporting with accountability. Now, reporting means regularly monitoring your results to ensure that you're on track and that you are on track with it where you want to go with your goals. We love using Xero cloud accounting that keeps your accountability and reports up to date. We can measure your actual against your forecast. We can see how you're progressing in KPIs, and we can manipulate some change some things around to change your results. So it's it's great fun being in business and being able to change your own results by doing things differently. You are more likely to do the actions that you say you're going to do when you've got a deadline to do it by and somebody else to tell. It's even better if you have a financial penalty if you don't achieve them. So when you're looking for a coach, you're looking for somebody who's going to keep you accountable to your own goals. You make the goals, and a coach's job is just to keep you accountable to actually deliver on them. So you want somebody independent from you, who is going to dedicate time to you over a period to work on the actions in your business plan, to respond to the regular reports, and helping you build the better habits of leadership of your business. It needs somebody with a backbone to be able to say, hey, this wasn't really good enough, but also heart to understand when problems happen that you had no control over. To leave every meeting with some clearly documented actions and some consequences for inactions is really good for coaching. So your next steps, what do you do from here? So you take today's message and you apply it to your life. Doing nothing doesn't help you. So make a clear plan that you can then articulate to your team, develop a forecast, and find somebody to hold you accountable. If you want help from us, you may get it. I do have this Better Habits worksheet, which you can send us an email, and I'll give you this for free. It gives you some questions to ask for some goal setting. And also, as a thank you for listening to this presentation, if you contact me, we will help you with a discount on various meetings to help you achieve your goals. So an improvement meeting with us without watching this video is $625, but if you come and you have seen this slide and you tell me about it, then we can do the improvement meeting for $395. We sit down with you for 90 minutes. It's really good value, and we find we promise that by the end of the meeting we would have found at least 5 times that value in your business. More likely 10 or 20 times, but let's just promise 5 times what you're already doing, some suggestions that we can suggest, and if you do that, then you'll find some extra profit and some extra cash for your business. We can give you a cash flow forecast, and we've got a discounted price for that if you mention the slide. If you prefer to do some coaching and forecasts, that's what we prefer. You can pay for the forecast over the 12 months, starting off with $195. We give you a forecast straight away, and then every few months we contact you and we review how you're going, how you're comparing, and giving you a little bit of phone accountability. And will you pay for that with $195 per month for 12 months? If you would like to be in a workshop with other people who are starting a business and you're prepared to put 3 hours a quarter to be in a workshop with other people starting a business and hear their stories and give a topic to the group to discuss and to get some information on how to grow your business from us, 3 hours investment in your business, promise you'll get your money back with this. It's only $125 per month, and we'll get you into a group. So let me know if you want to be part of that group. The final discount offering from watching this webinar is a business planning meeting. So if you have 30 days to contact me and decide, yes, Michelle, I want a business plan. I want to really know where I'm going. I want to start this business the way I intend to continue with it, with some really clear, articulated goals and actions. And stop that overwhelm. You walk out of the room feeling very motivated and encouraged. So if you want that, then let us know and we will help you with that. So if you've got questions, come back to me. And my parting thought is thank you for listening. Please commit to some actions as a result of watching this webinar, and then you will be successful. And I appreciate any questions or feedback you have for us, but I do hope that I've imparted some good ideas for you to ponder and some clear next steps as well. Thanks, everybody. Bye for now.